Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and their biggest secret that they are revealing right before their earnings report, which is coming up on May 10th, and I will do an analysis video on their earnings report later after it comes out. Then, as usual, we're going to talk about the most recent and updated price targets among professionals and analysts to determine if Sofi Technologies is still a good buying opportunity right now, and then we're going to move on talking about Mullen Automotive's MULN stock and the various news updates that we have for MULN Stock, including the recent good news and accolades that have come out about this overall company, which has actually invigorated investors to buy this company up even more. So I will be giving my thoughts on Mullen Automotive as well as what the overall media thinks of the company at current points. Then I will touch on their short seller report. Then lastly, we're going to talk about BBIG stock to determine whether Vinco Ventures stock, which is the BBIG stock, is a buy after they released their full year 2021 results and their future growth projections for the overall company. So for more videos like this one on Sofi Technologies, MULN Stock, or BBIG stock, comment down below which stock you want me to report more on. Subscribe if you are new, smash that like button right now if you haven't already, and without further ado, we're going to jump into our first story, which involves Sofi Technologies' biggest secrets. So Sofi Technologies, ticker symbol SOFI, is a fintech company or a financial technology company, and SOFI stands for social finance. This company offers an all-in-one inclusive app that gives their customers anything that they could possibly need in terms of financial products and or financial services. The SOFI stock price has fallen around 61% in value since the beginning of 2022, and many investors are actually turning their backs on various high-growth companies considering the current stock market environment of rising inflation, interest rate hikes, and Russia's invasion of Ukraine. This has caused a multitude of investors to either liquidate their stocks completely from the stock market and they moved their money over to the bond market, which is much safer. However, I personally would not do that. Or other investors liquidated their high growth stocks, which includes Sofi Technologies, and they are investing into more value blue chip classic stocks right now, considering the current market headwinds. Another reason why the SOFI stock price has been falling lately is because of internal company related headwinds, which means negative news surrounding the company, such as the student loan moratorium being extended, as well as their recent projections for their full year of 2022, which we have talked about multiple times in a previous video, so we're not going to go over that. However, we do want to pay attention to their quarter one earnings, which is going to come up on May 10th. So their earnings report for quarter one of 2022 will be released on May 10th. So we're going to actually talk about their projections and their secret weapon, which actually leads analysts as well as some other investors to believe we could actually see an earnings beat throughout the year of 2022. And the secret weapon is going to be their website traffic. So why is this important? Well, from quarter 4 of 2021 to quarter 1 of 2022, their website has had a total unique viewership or visitors, also known as UVs, of around 31 million, which is absolutely crazy because this would represent around a 52% increase from quarter 4 of 2021, where they only had 20.4 million people visiting their websites. Also, more impressively, this would represent around a 417% increase from prior years. So why is this important, and why are many analysts and investors very bullish on this? Well, as you can see from the chart on screen, they have collectively seen a gradual rise in the amount of visits that their website has gotten. However, if we look at the beginning of the year, or rather the end of 2021, in December of 2021, we see a radical spike in interest in their website, and then it decided to teeter off and stabilize once again, with hopefully a gradual increase in the future. So as you can see on screen, from November of 2021 all the way until March of 2022, we have seen a giant increase from the amount of people visiting their website, and hopefully this is going to reflect into people signing up for their products and becoming Sofi members. So this is why many investors are using this data from their website to determine that their upcoming earnings report could have a huge revenues and at least a membership beat in it because of the popularity or traction that their website is getting. This would lead us to believe that the earnings report is going to deliver a strong financial picture for the overall company, which is going to counterbalance the overall bearish developments that we have seen as of late. Some of the bearish and negative developments would be that Sofi Technologies issued updated revenue and earnings guidance for the full year of 2022, mainly because Sofi makes a large portion of their revenue from refinancing student loans, particularly regarding just educational debt in general. But because of the extension of the student loan moratorium, this has hit Sofi Technologies rather hard. However, it seems that investors have taken this actually out of context, and the stock now seems oversold. And a Wedbush analyst actually points this out. He says that the student loan moratorium extension actually only represents a temporary headwind, which means that this is going to be negative news only in the short term. He goes on to say that increasing brand presence, ergo their website traction, should drive member growth. Its integrated technology platform, which is Galileo, is a competitive advantage that allows for a seamless cross-buying experience aimed at a digitally native younger cohort. It has strong unit economics across its products. We expect credit quality to be stronger than peers given its borrowers are at the higher end of the credit spectrum with an average FICO of around or approximately 750. And the recently approved bank charter should accelerate earnings growth in our view, end quote. So overall, this is very, very bullish, and this is good news to see such support for Sofi Technologies, especially from an institution such as Wedbush. This particular analyst has an outperform rating, which is a buy rating, and a price target for the SOFI stock, which is the ticker symbol of Sofi Technologies, of $15, which he thinks that the company can hit within the next 12 months. This would represent around a 134% increase from the stock's current price, which we will talk about in just a moment. Right now, we have 7 very bullish analysts and 5 analysts that say to hold the company. And these analysts are not just regular analysts who are wrong most of the time. These are 4 to 5 star analysts, which means that these analysts are actually right over 65% of their overall time. Some of these analysts think that the company is going to surge by 110%, others think it could surge by 175%, while the more bullish end of the spectrum for these 5-star analysts think that the company could surge by around 224%. However, on average, we see that the potential upside from the stock's current price, which is right now at around $6.20, currently represents an upside potential of 139%. We have the high-end price target of $22, the average price target of $14.86, and the low-end analyst price target of $10. However, even their low-end analyst price target is still greater than what the stock price is currently trading right now. And although all of these analyst price predictions should be taken with a grain of salt, we can see that the bearish analysts that are naysayers and negative about Sofi Technologies, they even think that the company is oversold right now and it could be a fantastic buying opportunity because the current stock price is substantially lower than the low-end analyst price prediction, even according to a naysayer. So that absolutely speaks volume about the buying opportunity we are seeing right now, as well as the future growth potential for this company. So I still personally like Sofi Technologies. I own Sofi Technologies, but remember not to overexpose yourself to just a single growth stock. This is still a speculative play, and I think investors need to be willing to hold this company for at least 3 to 5 years, or at least until 2024, which is their projected year of profitability. But with that being said, I would love to hear your thoughts down below about Sofi stock before we move on to our next story, which is going to be Mullen Automotive's MULN stock, which is currently trading for around $1.30. If you didn't know, Mullen Automotive is an electric vehicle manufacturer, and they are relatively new. Their stock ticker symbol is MULN, and the company has received loads of attention from retail investors as well as multiple news outlets. So let's actually take a deep dive into this company to determine what we can actually find to see if this is a good company. And we can do this by looking at Mullen's CEO and chairman, their VP of marketing, and their vice president of vehicle engineering, which recently did a question and answer session related to the discussion of their new electric vehicle, which is going to be the Mullen 5 EV crossover. And in this interview, we know that the company had already debuted 2 versions of the Mullen 5, and they announced the purchase of a vehicle manufacturing facility in Mississippi. Financially, Mullen has around $65 million worth of cash and or cash equivalents, and they hopefully want to carry their stock momentum into the future because it has fallen very dramatically as of late. Mullen also has announced a very large list of key partnerships, which you can see on screen right here. I'm not going to bore you by reading through all of them, but they have landed multiple partnerships that is going to help this company over the long term. Mullen's current EV portfolio consists of its Mullen 5 EV crossover, the Mullen 1 EV fleet vans, and the Dragonfly sports car. On top of that, the Mullen 5 was also named the top zero emissions SUV as the ZEVA or ZEVA Awards at the Los Angeles International Auto Show back in November. The company also has very good intellectual property because they have filed over 120 patents in 24 countries related to their Mullen 5 and other vehicles. The Mullen 1 is also anticipated to be on the market, or at least come to market, in Q2 of 2022, and it will be available in two separate classes of electric vans. Now, although this is very bullish overall, I personally am not actually a fan of Mullen. However, that's just my personal opinion. You should always make sure to do your own research to determine if you want to actually take on the risk of this particular company, but for me, it's too risky. It's too much of a startup company right now, and I anticipate that the stock price is going to continuously fall, especially because the short seller report, which came out a few days ago, which I will go over very quickly in this video. Now, what I do like about Mullen is that I really like the look of their cars. It actually gives me somewhat of a Neo vibe. These cars look very similar to Neo cars in my personal opinion, and I am a big fan of Neo. Many online social media outlets have actually been talking a lot about Mullen Automotive and their respected MULN stock, and they have given this company many accolades, but to me, I am not actually impressed with this company for a multitude of reasons. So we really need to be paying attention to the type of websites and the type of awards that this company is actually achieving right now, because if they don't come from credible sources, it's basically useless information that is overhyping an already very hyped stock in my personal opinion. But now let's talk about their short seller report, which many believe is actually overblown. Now, the main reason why I am not going to buy MULN stock, now I might buy it in the future, but based off of current fundamentals and financials, this company is just not doing it for me. I would much rather wait for this company to prove itself way in the future before I decide to hop on this particular company. The short seller report, I do believe, is unfair in some areas, but overall, I do agree with them. For instance, the MULN stock has fallen from around $15 per share down to around $1. Right now, it's trading at around $1.30 as of the time of this video. This has led multiple people to believe that a potential short squeeze could happen because it does have high short interest. And to me, many companies in this current market environment are experiencing high short interest, which would include the MULN stock. For instance, the company is experiencing around 15.92% of their float being shorted according to Fintel, which is a reliable source. Now, what I do like about the company is that they are trying to develop a very effective solid-state polymer EV battery. However, in my personal opinion, I would bet my money on QuantumScape, which is literally doing the exact same thing, because I do believe solid-state batteries will be the future of electric vehicles. However, now I want to talk about their short seller report. So their short seller report, or their short report, came out by Hindenburg Research, which is a very well-known short seller. They are an activist short-selling firm, so it's no surprise that Hindenburg Research wants to talk badly and poorly about a company just so they can short the company, so we need to keep that in mind. And the main premise of the short seller report is Hindenburg Research saying that Mullen Automotive is exaggerating and misrepresenting their EV battery technology, and the tests that they're actually doing are not accurate, so they are misleading investors. This leads us to believe that this company could be more like Nikola or even Lordstown Motors instead of being the next Tesla and or Lucid. But how accurate is Hindenburg's research being here, and is it a fair comparison? Well, surprisingly, the CEO of the company that tested Mullen's EV batteries, called EV Grid, claims that Hindenburg Research, which is the short seller, misquoted him, and they're actually exaggerating what the CEO says. So the CEO of the company EV Grid, who is the company that tested Mullen's battery, believes that Mullen is actually not misrepresenting the battery test results that they performed. So in this case, this would actually make the short seller report inaccurate. However, I believe this is still enough to make investors extremely scared, so I think that the stock price could plummet at least in the short term. But even if the company and its vehicles do have a solid-state battery, in my view, Mullen just does not have the cash and the finances to actually be a successful company right now without either diluting shares or taking on a massive amount of debt. And especially in this high interest rate environment, taking on that amount of debt is not going to be very wise. So, I think that the short sellers will ultimately prevail for this company. However, a short squeeze is definitely possible, but based on their current finances and fundamentals, I am not a fan of MULN Stock at this current moment in time. They could easily change my mind in the future, but as of right now, I don't like either of the financing methods that they could use by either diluting their shareholders or by taking on debt outside of that, because right now the company is not impressing me with their financials, which is going to lead us into our last story, which is going to be about the BBIG stock, which is also called Vinco Ventures stock. So is it a buy after its current full year 2021 results? Well, currently the BBIG stock is trading at around $2.21, and no analysts are currently covering the stock. So let's remember to do our own research and dive into this company. So if you didn't know, Vinco Ventures, ticker symbol BBIG, is a digital media and content technologies firm which operates as an end-to-end consumer products company in the United States, according to this article. And the main interest for this stock actually comes from Vinco Ventures buying and developing Automotive Private Limited, which is a video sharing app like TikTok. And on April 18th, Vinco Ventures announced its fourth quarter results and full year results for 2021, which revealed very good information for us as well as Wall Street. And the numbers and finances don't look good for this particular company either, same with Mullen. Their total revenues decreased by around 18.5% for the full year of 2021 because they brought in around $9.8 million, which is a decrease from the full year of 2020 where they brought in around $12 million. So clearly management is not showing tangible results, and I have a huge problem with this company. I think it's extremely speculative. So definitely don't overexpose yourself to this particular company. These are extremely risky stocks that I'm talking about in this video. However, clearly my personal favorite out of these three is going to be Sofi Technologies, because Sofi Technologies does have a awesome competitive advantage and good fundamentals and financials in my personal opinion. The main draw for the BBIG stock is that the company is actually deploying their Automotive platform in the Indian markets. And the reason for this is TikTok was actually banned from this country ever since 2019. So the platform is actually anticipated to gain loads of traction. So what can we say about the positives for this company? Well, I would say that the biggest positive would be their spin-off company, which is Cryptides, which is BBIG's non-fungible token business, which has already filed for their own Form 10 registration with the SEC, which is the Securities and Exchange Commission, and this newly formed entity is planning to launch its own crypto mining equipment reselling business, and it has already welcomed in its initial customers in quarter one of 2022, so at least that is positive. Feel free to add the MULN stock or the BBIG stock to a watch list, but to me they are not good long-term investments as of right now, based on current projections and fundamentals and financials. But on the other hand, I believe that Sofi Technologies does have fantastic financial projections and good fundamentals. So I would love to hear your thoughts down below about the Sofi stock, MULN stock, and BBIG stock. Subscribe if you are new, smash that like button if you haven't already, and I'll see you in the next YT video.